Hey there, and welcome back to another episode of the Friday Five. It is a rainy, dreary Monday here in early May, but it's going to be a nice weekend. So I'll trade ugly Friday for a beautiful weekend. All right, number one, let's jump into mortgage rates. Again, national averages from Mortgage News Daily, as I quote every single week. It would be super helpful if I actually put the rates on my notes. So I'm going to hit pause, put the rates on my notes, and come back to you. All right, I have the rates on my notes now, so here we go. VA 30-year fixed, 6.25%. FHA 30-year fixed, 6.25% as well. Conventional 30-year fixed, 6.89%. And conventional 15-year fixed, 6.21%. Lastly, that conventional 7-year ARM that I added, 6.5 right now. So still under 7. I think we're pretty close to where we were last week. Tariffs, tariff deals, Fed and inflation, jobs reports all playing an impact. Not a ton of movement since last week, though. Number two, I want to talk a little bit about student loans, what's going on with student loans, and then a cautionary tale. So back in March of 2020, during the COVID outbreak and shutdown, the U.S. Department of Ed paused payment requirements, stopped collections, and stopped charging interest on eligible federal student loans. Student loan relief was extended multiple times over the years, but then interest started accruing again back in September 1st of 2023. Payments restarted October 1st, 2023, but there was a 12-month on-ramp period, basically still another forgiveness period till October 1st, 2024. So now, as of May 2025, collections have resumed, and also late payments on student loans have started to be reported to the credit bureaus again. Right now, this is kind of a staggering number, 10 million borrowers are past due on their student loans. 5.3 million of them are in default, which means they're greater than 270 days late. And another 4 million of the 10 are in late stage delinquency, which means they're 91 to 180 days past due. So if you have a student loan and you aren't paying on it, you need to review your account and connect with your student loan servicer to make sure that you don't have payments due. You can apply for income-based repayment options still. You may be eligible for deferral or forbearance if you're in school or based on some other circumstances. But you cannot just act like your student loans don't exist like you have for the last couple years, because you could find out that the government could withhold your tax refund or garnish your wages if you're in default. So please, check on your student loans. That takes me to number three. I'm going to give you a real life example that we dealt with within our mortgage branch here this past week. This customer, we originally pulled a soft pull credit report, which is pretty common when a customer is in the pre-approval stage now. We pulled the credit report back on March 31st of 2025. He had no lates. His 3 credit scores were 700, 715, 732. So his middle credit score that we would use for mortgage purposes was a 715. He went under contract, and we updated his credit with a hard inquiry date of May 6th, 2025, and his credit report showed 4 different student loans that were currently 90 days delinquent, and his credit scores went from that middle 715 down to 538, 551, and 551. So his middle credit score now is a 551. Luckily, we were able to find a solution for him, but it required a bigger down payment for he and his fiance to get approved. Luckily, his fiance had great over 700 credit, so that helped offset things a little bit. But please, 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 if you have student loans, pay attention to them. Free lunches are over on them, and most student loan holders now need to make regular monthly payments. And if you don't pay attention, you're going to get burned. Number 4, what is the LE? So this is my mortgage acronyms series. The LE is the loan estimate form, and it replaced the good faith estimate back in 2015 as part of the Dodd-Frank Act. The LE form is a federally required document that you should receive from your mortgage lender at the time of initial application. So this isn't when you initially submit a pre-approval application. It's when you actually go under contract, or if you're doing a refinance, at the time of submission. It includes details on the terms of your loan, including the purchase price, down payment, loan amount, interest rate, annual percentage rate, monthly payment, mortgage insurance if you have it. And then there's a bunch of other important information on there that I don't want to go through every single line item. It also lists the closing costs, the prepaid expenses, which would be like taxes, insurance that you put into escrow up front, and then any credits that you might be receiving either from the lender or from the seller or any other credits. And then it also includes your final cash to close. So it's supposed to give you all of your numbers up front at the very beginning so you can be an informed consumer, so you can shop between lenders, and you know what you're getting yourself into. So make sure you check out that LE form when you make initial application. It's a super important document and pretty informative as well. Number 5, I'm going to do not a quote of the week, but more some thoughts of the week from my life experience. So my encouragement for this week would be, don't rush the next stage or destination. Enjoy where you are in the journey. So I feel like talking about journey and enjoying the journey is pretty common, but I'll give you my life experience. I have 6 kids. They range in age from 6 up to 18, and my 4 oldest are all boys. They are 12, 15, 17, and 18, almost 19. And my oldest, all my boys play baseball. My oldest now is essentially done playing baseball. He's a freshman in college, and he's kind of retired. And I realized probably a year or so ago that I think maybe I've seen him stand on the mound and pitch the last time. And for a dad, I love watching my boys play baseball. I can't count the amount of games I've seen in my life and watched them play, but man, I love it. And it's taught me to appreciate where they are, where they're playing now, not be worried about are they going to play, my 12-year-old, is he going to play, in high school, or my freshman, is he going to play on varsity? I just want to be present and enjoy where they're playing now, the success they're having now, and just be there to cheer them on. So that would be my encouragement for you guys if you have kids that are involved in sports, or even if Nikki from my office, her son is involved in theater at a school, and we always try to go support Julian in that, and just love where they are. If they're a musician, love where they are now, but just be present. Don't rush the next stage. So thanks for watching. If I can help you in any way, please reach out, and have a great weekend. Enjoy the sunshine that we're going to see tomorrow and Sunday.